Morning, everyone. Welcome for joining us once again. And let's get straight into this. As they say in Chinese child war camps, labor camps, another day, another dollar, I guess. Yeah, okay. So let's start off with rates, as we usually do. 2-year and 10-year yield. Testing trend, as we've been discussing a lot, depends on the upcoming CPI print next week. Interesting observation. These news which hasn't been highlighted at all in financial media is the fact that they are changing the CPI calculations once again, as they've been doing for the last 40 years. We know that they have to systemically underreport CPI because everything is based on the inflation. All social programs calculated based on the inflation, real rates and all that stuff. So yes, and they probably gonna underreport and change CPI. If they ever going to change CPI calculation, once again they're going to change it for less rather than larger prints. So this is an interesting fact. This increases the probability of the soft landing because, if you can just rig the game and rig the numbers, and if the CPI comes, let's say, in 3 months instead of 4.55% in second quarter, as we expected to, based on the current calculation, around 4.55% in the second quarter of this year. If it comes below 2%, just based on the fact that they changed the calculation, then yes, definitely, we're gonna get a sustainable kick off the can down the road, even without just plain unfair. Let's put it bluntly. But nevertheless, nothing has happened as of now. 2-year yield is testing its trend. Whether it's gonna break and push higher, God knows. Honestly, nobody knows. It's not the time to go long 2-year yield. We've been calling for consolidation, and consolidation it is. Same thing for the 3-year yield, same thing for the 10-year yield, 10-year and 30-year yield. One thing that we'd like to do is to start systematically selling puts on TLT. The trend is clearly visible at this point, and all inflation, down inflation. The trend is inflation lower. Regardless of the CPI is just the catalyst of just more volatility and more oscillation within the current trend. As we've been calling the trend for the long end is not going to be like this, as we usually get in the Quad 4 environment and falling growth and falling inflation environment. This time it's going to be like this, more or less. And all what CPI does is just creates these oscillations within the larger environment. But the trend is still downwards, so we'd like to start selling premiums on the TLT. We'll highlight when we finally do this, but as of now we did nothing here. Same thing with the 2-year yield. Is this a good place to start accumulating the position for the long term for the upcoming year? I think it is. I think even if we get another impulse higher up to 5%, this is going to be the top. I just don't see how you can lose money if you position yourself properly, and your position with a long enough time horizon, you can start buying into the short end at this point. And you're going to pick up this coupon, and the probability of nominal gains on your principal is very, very high, in our opinion. Anyways, so yes, these are the rates. 10-year yield in Europe, as we've been calling out, long 5B US, long short end in Europe. Inflation in Germany came out at 9.3%, if I'm not mistaken, still at 9.3%, and that's a lot of inflation. They can't seem to get the inflation down in Europe, and why should they? These structural problems are so big. And their target rate is 4.5%. Oh no, yes, 4.5%. Their core PCE estimates at the end of this year, and the target rate is 4.5% as well. At this point, it's 4.75. So there's plenty of room to go to the upside. We are pretty sure when the time comes and the Fed really starts to pivot, they're not going to play ball really long after the Fed pivot, meaning ECB, they will pivot alongside the Federal Reserve, so it might happen just like this in no time. One day they can say, oh yes, we are definitely on the track to raising to 4.5, 6, 7, 2800%, but on the next day they're just going to come out and say, oops, no, we think we should stop raising rates at all. But for the time being, long 10-year yield, long end in Europe, and long the short end in Europe as well, meaning short bonds, short long end in Europe in general. These are for the rates. Rate sensitivity, meaning gold and dollar. Dollar is pushing higher, as we've been calling out. This is a meaningful break in trade, and the probability of creation of a higher low in here, which will be decided based on the upcoming CPI. We are pretty sure whether we're going to retest this high once again and create a higher low and push higher from here. The fact remains, we're not going to revisit this low anytime soon. Even if the CPI comes in lower than expected, the probability of creation higher low in here is larger than the creation of a lower high and pushing lower from these prices. Same thing with the euro, same thing with JPY as of this moment. And gold. Gold market, we've broken the trade once again. The trend support is 1776. Still have ways to go. We are still in consolidation on gold on the trending basis. For the silver, same thing for the silver and platinum as well. The platinum, we actually did break a trend yesterday. I did not notice that. We did break the trend, and it's interesting signal of the weakness in the rate sensitivity complex. But well, oil is signaling consolidation as of now, still in the middle of probable range. No trades here. We've been short of some of the oil names, but we are looking to, as we've been calling out, start creating and rolling our call cover called on XOM, ExxonMobil, and Shell. Possible or looking into the opening cover calls, or maybe selling puts on these names. Equity complex, Bitcoin, exactly what we've been highlighting yesterday. We've been looking for this drop. Same thing with Ethereum. When you get this beautiful and clear setup, as general technicians call it, what ascending triangle, usually it never works out this way. You get a spill, and only then do you continue higher. Nothing has changed. The Ethereum and Bitcoin is signaling bullish trend. Bullish trend meaning that even break in trade that we've instituted yesterday does not change the trend at all. We still expect creation of a higher low within these boundaries. We prefer not to see Bitcoin going lower than $20,000, which will constitute a break in trend. But any oscillation here is a possible point for accumulating the position into the next move into 25,000. I have no idea, once again, as I said in previous update, what might spur this another risk on movement, maybe the next CPI print or something. But it is a point to be long of crypto and Bitcoin and Ethereum more specifically, because it's the thing that we usually trade. Ethereum, once again, we broke trade, but the possibility of creating a high low on a trending basis is still very high. An example that I should probably portray is this one. Simple break in trend, break in trade in here, and momentous rebound into creation of a high low on a trending basis. Same here, might happen here, but this will take more time than it did here, obviously, because we are simply now bullish on a trending basis, and this was break in trade, and that's it. Now we are in the process of creating a weekly high low and continue higher. Of course, we have to entertain other possibility that this was essentially another monthly lower high, which will lead us into the retest of 15,000 and possible move down to $12,000. No indication as of now that this is what is happening, so we are looking for creation of a intermediate and immediate high lows for the crypto market in general. For the SPX, same thing for the SPX, bullish trend, bearish trades. We finally broken the trade in this whole movement, this move up that broke the trend. Now, based on the upcoming consolidation, based on the volatility, retest of 1415 is a very pleasant place to go long of SPX and go long of the exposure that you like. Same thing, our call is for immediate and intermediate creation of a weekly trending high lows on the trending basis for the whole equity complex, whole risk on complex. DDM, DIA, same thing. IWM, exactly the same thing. Possible retest of the trade. QQQ, Qs, same thing. And yes, Europe, same thing in Europe. So to be more precise, we are looking into we still have a couple of longs on our trending basis. Options we have opened 40 days out, more like a earnings plays for GEO and NMM. We've had a nice pop yesterday. The earnings coming on 15th of February for the GEO name, but the other name in this sector is CXW that we've been observing, and the yesterday's print in earnings, the positive surprise, gives us more faith in our position that the surprise for the GEO will also not disappoint. The earnings for this name that we are long of will not disappoint. The trade for this name is $11 at this point. Everything above is still long. Even if it comes and retests $11, we still be holding the position definitely. Our target is 13 at least, and $14. We'll be closing position at $14. NMM in consolidation, same thing. Earnings continues to grow. Earnings per share continue to grow. Revenue continues to grow, and all this consolidation after we've finally, with the SPX being implying the creation of a weekly high low, and generally having a positive flow, these names should pop off if we identify the opportunities correctly, obviously. But this huge consolidation on a monthly basis in the sector that we like, with the retest and sweep of the tail support, creation of a weekly high low, meaningful large consolidation below the middle of the probable range. Let me change the color. What was the color that we've been using here? Okay, let's put this one then. this one and this one. Okay. No, this looks horrible. Yeah, this looks better. So, our call is for the pop higher on the upcoming earnings. We shall see. Earnings coming out on 15th of February as well. Okay, these are the longs that we're holding right now. A couple of interesting shorts. It is very hard to find those shorts when the S&P is in the whole risk-on environment is somewhat bullish at this point. Not ragingly bullish, but if you identify the opportunities and you find the names that you like to short on the fundamental basis, you can short them into the earning place because earning dates, because the underlying fundamentals in the economy are decelerating. It's not a unipolar deceleration in the whole economy when you can see that the impulse is so clear. But some places signal definite recession, some places and the interesting thing to point out, ISM manufacturing services and ISM non-manufacturing services, they have the biggest divergence since its creation in 1977 or something, if I'm not mistaken. I better illustrate this. It's in the rates component, yes. These, no PMIs. Yes, these are PMIs. Manufacturing new orders, yes, and these are non-manufacturing new orders. If we overlay USMON on top of each other, you see these divergences, the biggest divergences that we had since the inception of this service. The directions here are pretty, the movement is very unipolar. The co-movement is clear, but this time look at this print and look at what we have, the manufacturing services. Divergence is huge, so a lot of unclear signals. And interesting thing is that this cycle is nothing like other cycles, and we have to treat this definitely differently and be prepared to make an unusual movement and position ourselves accordingly. A couple of names that we like, and I was talking, if you identify the names correctly, when they have to come out report reality, you see a horrific earnings, and which ultimately pushes the market and pushes the names lower, like AFRM. The guys came out horrible earnings, gap down, created a weekly lower high, and still signaling bearish trend. Canada Goose, still signaling bearish trend with the earnings reported reality, and you've seen this massive move downward. AMC, GME, HZO, Pool, ONU, these guys also had to report reality. Came down really hard. AZO came down really hard. LESL, Pool, names that we like, came down really hard. PWOL came down. No, they haven't reported earnings yet, but we're looking into the possible possible shorts if we do. So essentially, what we have, you have a positive flow for the whole market, somewhat risk-on environment. Well, when even the names that fundamentally have horrible problems and decelerating, the part 1s, part 2s decelerating meaningfully, but they move, it's just the flows. Everything moves upward, so it moves from its fundamental equilibrium, the point of fair value, something you might say with the whole market, and when they have to report reality, everything just snaps back into this. And if you identified the names correctly, if you identified the fundamental realities for those names correctly, then you can, with this divergence from the mean, you can, with the market pushing upward, you can short into this strength for the trying to catch the earnings and try to catch this move downward. One of the names that we've been successful in doing so is HZO. Brilliant play, simple. underlying reality is horrible for this type of business at this point. You have this strength coming into the trend level, based on the whole risk-on environment that we've seen, and then it just snaps on the earnings, and you get this nice pop downward, still signaling bearish trend, instituting and confirming the bearish trend environment for these names. A lot of good shorts still, but certainly not as many of them as we've seen throughout the 2022 because of the underlying reality of the whole market. Other names that we like, AFRM, yes, we've highlighted those. PayPal, still on the short range for us. Wayfair is earnings coming out on February 23rd. Still a bearish trend. We shall see. It's plenty of time till the earnings come out. We shall see what the structure will be at this point, where the market will be, and maybe we'll play Wayfair as well. Sweetgreens, another interesting place. Roku, another interesting name. I'm just listing them all out so you can possibly take advantage of them. The earnings coming out on 15th of February as well. All of these names that we have here on the short bias list, the fundamental work has been done on them. So these are the interesting shorts from the fundamental standpoint. You just have to identify the opportunities correctly and just time them right. And some of those names you'll be incorrect, obviously, but playing them correctly with the options, building the correct option structures will give you a asymmetric payout, and you can be wrong 50% of the time, but you can still make money. Other name is Pool. Earnings are coming out. Dash, same thing. Earnings are coming out. Testing is trend resistance. PLTR, PEB. Consumer services, these are hotels if I'm not mistaken. Testing is trend right now. Fundamentals are bearish. PLTR, same thing, testing its trend resistance. We shall see where the market will be. As we've seen this unipolar move into S&P lower, as we've been calling out, but we expect S&P to create a higher low possible and continue pushing higher. But this name can pop even stronger to the downside if earnings come out as expected. For the PLTR, yes, and other interesting. Let's pull up the SPX once again. So we do expect the creation of a weekly high-low in here, theoretically, judging just by our signal. These are all the place. This is the area to be to get long of the S&P. Maybe start selling puts. Very interesting observation. I should point out that despite the fact that you should theoretically prefer to sell optionality in the elevated implied volatility environment, historically, you are most profitable when you have the correct environment for this, meaning that you have these you have low implied volatility environment, but you have these episodic and non-trending spikes in volatility. So we are definitely in some sort of the Goldilocks environment right now. And these we might not see another pop like this higher from these points. We may see consolidation here. We may see some prolonged couple of weeks, months consolidation within those boundaries, and maybe then we can retest the monthly pop higher from these levels. So we prefer to sell optionality, sell puts on the S&P here, or create some sort of the structure that takes advantage of selling options here, not essentially buying and betting on direction, but the trend for the S&P is 387, so we are the closer it comes into this, we would like to sell options here, as simple as that. We'll highlight if we take any positions on them. Other very interesting and very important point to make is that high yield broken its trade as well. For the high yield, is not as simple High yield has been testing its trend resistance since another time here for a while. I'm not sure how to. Our signal is essentially saying that the trend duration is neutral, but the trade is bearish. So make of it what you will, but this is a very important checkbox into the bearish side of our ledger. You have to be very careful if high yield is signaling bearish trend, and when the high yield will be signaling bearish trend, we shall take notice of that. So far, we're just signaling bullish, bearish trade, not the bearish trend. For the constitution of the bearish trend, we shall see, and we shall wait a little bit longer when it finally creates another daily higher low, and if it finally breaks higher low in here, this will constitute the creation of a weekly lower high. So have to be careful with that. But generally, we can generalize this as, let's open up mortgage ETF. This is a simple retracement of this move higher. Not necessarily something that we look into that should create a higher low and push us higher meaningfully. Market generally looks like and signals us a consolidation period. The probable volatility bands are very, very wide, and we shall see something like this, something of a consolidation. Nothing meaningful to push the markets of this equilibrium to the downside as well as to the upside. Same thing for the SPX, same thing for the PCY, BKLN, simple retracement within the bullish trend as of now, but we do not expect a meaningful pop in the prices upwards. That's why we'd like to sell optionality. So essentially, you may not be directionally right that it will go higher, but you still make money on the premiums. Okay, rates, we've been through this commodities, not gonna go through commodities. As of now, nothing to highlight there. China, we've been going some and looking for some of names that are of interest to us, and we'll make a post in our Telegram channel for a couple of names that we definitely like on the long side if we are still expecting another pop in China to come. Essentially, we've been calling for this retracement, we've been calling for this consolidation, possible creation of a weekly high low, another pop into this monthly resistance. As of now, it's not the time to get long China, not tactically. And if not tactically, we don't like China on the investing basis, so have to be very careful with that. So the dollar in consolidation, we're not going to see anything this week. Definitely no news, no catalyst. The upcoming CPI print will be the catalyst that will identify where we will go on the trading basis. So we're still long of the JPY as a hedge, simple diversifier of our longs on the equity side, and that's it. Incredibly hard market to trade. These consolidation, no clear signal of a trend or meaningful trend in any of the markets. Simple consolidations. And we are in the middle of a probable bands, so nothing to do. It's not even the time to sell optionality here. Let's a couple of words about our mega caps, about the big boys. Apples of the world, Google, Amazon, and Microsoft, all of them are signaling bullish trend. So once again, we've been pretty overextended on Apple, on Amazon, on every other name. This will be just a normal retracement. Even if it tests 141, it's still a long on a trending basis. So it is what it is. Google, same thing for Google. Yes, they do have problems on the fundamental side with the new competitive in face of Microsoft on their browser side and search side of their business. We not have any positions on Google so far, but still signaling bullish trend, and it has not broken trade yet, so have to be very careful with it. Amazon as a very cyclical company, and they are really reporting reality. They laying off people, they're guiding down, they are warning, they're saying that the economic environment deteriorating very quickly. If the Amazon says that, and they have the most visibility into the US consumer, the most visibility out of all companies in the world, and if they say that, it means they are seeing something that we do not see as of now yet. But they are giving us a lot of, they are being honest about it, and giving us a lot of fair signals that we should not ignore. That's why, in terms of the relative strength or weakness, Apple is the strongest of the bunch. With the Apple, Microsoft, Tesla are the strongest of the bunch, and not the time to go long with them, but they are all signaling bullish trend and bullish trades. So bullish trend, not bullish trade as of this moment. Essentially, if I can summarize, on the equity side and the crypto side, we've had this massive pump that on all of the names that broken its trend resistance right here. For the first time since the beginning of the 2022, for the first time in, well, over 400 days, and we are in this point. And it's just normal to see either a prolonged consolidation or quick retracement. If we get a quick retracement and a quick move downward, I'd like to buy this quick move up downward, because the pop on the other side will be bigger, to see retest of the previous highs. If it is a consolidation, it just takes more time. We are in the beginning phases of this consolidation on most of the names. So it is. Yes, that's the overall recap. Okay, thank you for listening, and see you tomorrow. Cheers. If you have any questions, write to us. You can write to us in Telegram channel.